Hello and welcome to this week's Middle Class Investor. This is Seth Martin, your host. Right up front, I want to apologize for my voice. I had a little cold/cough and got drainage. So if you hear me sniffle, you hear me cough, I want to apologize now so that I don't have to apologize gazillion times during this week's presentation. All right, what we're looking at here is the S&P 500. The March 9th low is way back here, and you got this 7+ year bull market. And then last year it started to really narrow and kind of give this topping look, and we'll zoom in on that and I'll show you what I'm talking about. I've talked about it before, but it doesn't hurt to recap. You can see this slow kind of rolling action. Okay, we actually pierced it back here and maybe started to look like it was going to be just a pullback, and then we got these pretty strong down moves. Now here we are back at this top area, scratching our heads and going, what are we looking at here? What's going to happen? Well, the short answer is there's no way to know what's going to happen, but there are essentially two possibilities. Possibility number one is this move right here was actually a change. Let me zoom out. Let me try this again. Possibility number one is this move right here was a change in trend, and all this has been corrective. You get kind of this. This actually has a name in the Elliott wave. It's called a flat. It's very possible that this is a flat. That's scenario number one, which means that the downtrend is in, and we're waiting for the next wave of this downtrend to begin, and it'll be much, much larger than this move right here. Now, possibility number two is that this whole thing right here, let me draw it real quick, is corrective. So this is kind of an ABC. Kind of an ABC correction. And this is wave one of a next move higher. So how do we know which is which and what is what? Well, we don't know, but what we do know is there's certain little rules. So I want to tell you, basically how we're gonna notice what is likely to happen. So let me get this off the screen. I've marked this area, this 2111.05 area is very important, and you can also see there's a little yellow oval on it. If this price action goes above this area, above this high, if we break this high right here, which I'll tell you what date it is in a minute, then this cannot be a corrective move. This whole thing here cannot be corrective, which means we're going to make a higher high. Now, where we are at the end of this particular run that we've had here recently, since I don't know, was it March 20th or something like that? And so we are expecting a pretty good pullback that would probably take us to the bottom of this channel. But if for some reason this pullback takes us to new lows, then the trend is in, and you can expect much lower prices from here. So, depending on whether you're long your 401k or you're on the sidelines would depend on what you do here. But I think the most likely scenario, given what we see on the chart here, is that we end up breaking this 2011 high, maybe coming up into here around 2020, and then we get a pullback down to this lower part of the channel, in which case we're gonna make new highs. So this would be a great place to enter. You might want to wait for it to come off that a little bit and then enter, but because it could pull back even further, it could pull back. Well, it could pull back all the way to here and still be on its way to higher highs. The key is if it takes out this low, then the trend down is already set. If it doesn't take out this low and bounces and starts to move higher, then we're going to get higher prices. This high back here is not going to hold, and we would expect the market then to probably come up into this DP area that we've had marked, this blue area. So I'll zoom out so we can see this a little bit easier. But you can see the old highs back here. If this is all corrective, which I would say there's probably a 65% chance this is all corrective and we're going to make higher highs. But first we're going to have a pretty good pullback, at least to here, and we could break this line a little bit and maybe come into this blue line here around 1900. And if we bounce from there and start to move higher, then likely we're going to get up here, maybe around 2300. So we just have to wait and see. We're right at the juncture we're at right now is very, very critical because we're so close. We're at 2099 right now. And obviously that's very close to 2011. In fact, this old high right here, let me zoom in on it. This old high right here, let's see what that is. I can't tell what that is. Right. That is 1990. Oh wait, that's not the high. 2000. Yeah. So actually, this is the high that I'm concerned about. I drew that oval a while back, and it's confusing me. Let me draw another oval right here. This is the one we want to focus on. If we break this high right here, which we're very close to, and so it's highly likely that we do. But if we break this high right here, then likely the next move is we're going to have a pullback, and it'd be a pretty good place to enter in the 401k because you're talking about a move from, say, around 1900 up to around 2200. So that's 1200 points, or excuse me, 120 points on the S&P, which is pretty good gain for your 401k. So just watch it carefully, try to make a decision. I try to give you a framework here where you could make a good decision. Bottom line is if you see the market above this 2111, let's say it gets to 2115 next week, then look for a pullback that'll kind of look like this. It'll kind of go down, up, down. And look for it at least into this 1925 area and maybe as low as this 1900 area. And then try to enter there. And try to make the move to 2300. Should be a good return. All right, let's take a look at the VIX. Volatility index. The VIX is still in this range. It's been in this range for quite some time. Again, it's in the lower part of the range, which makes sense based on what we just talked about, right? We could have a little spike up Monday and Tuesday, maybe even Wednesday, kind of chop around with a spike up and then pull back pretty hard, and you should see this VIX come to at least 20, maybe up here around 22. You know, the VIX can't stay down here for very long. I mean, that's just not the way the VIX works, especially this late in a major trend. So I wouldn't expect the VIX to go much lower here. It might kind of break out of the box a little bit and then pull back in, kind of like this week here. But I wouldn't expect the VIX to come way out here and close and make several closes over the next several weeks down here. That's just not likely to happen. What's more likely to happen is for the VIX to reverse and get up here around 20. generate a little fear in the market. So there's the VIX. Let's look at treasuries. There's been a lot of talk about the Fed and are they going to raise rates? And you can see here our triangle is holding up, although we did get outside the lines here a little bit. But we talked about this being a continuation pattern downward. So, if this is a wave down, then you've got, kind of an A, B, C, D, E. Then this move here should continue down into this area, this box right down here, below this low. This low right here is key. So look for yields to continue down lower into this area. Obviously, this is a big move here. There was a big decrease in yields this week. It's part of the reason I don't think the Fed is going to raise rates. You've got a lot of speculation. Is the Fed going to raise rates? Let's look at our handy dandy 13-week Treasury chart. We're still not above that line. If you recall, last week, or maybe it was the week before, we talked about that if the yields didn't close above this line, the Fed likely would not raise rates. Now, maybe it's close enough. I don't know. Or maybe we get a pop next week, and then will they meet like the following week or something? So it's possible still that this closes above the line. I mean, maybe we get up here like this, and then they just feel compelled to raise rates. So the key is this line, though. This is 0.35063. This is a 13-week yield in very short-term treasuries. This is a great chart to remember. It's the IRX. It's right here, $IRX, and you can go to another charting. I showed y'all one a few weeks ago that's a free charting. We can visit that again here in a minute. But and you should be able to pull up charts that you're interested in. The Dow looks pretty much like the S&P 500. The key, it's a little bit lower though, so that could mean that we don't get a break of this. If we don't get a break of this high right here, let's put a little oval on it. And I don't know, to me, I've always learned that the S&P 500 is the boss, and so that's the one you look at. But the Dow, if you study things like Elliott wave or these longer term patterns, the Dow is usually attributed to a more sensitive barometer to people's mood and the general productive capacity of the economy. So who knows? I'm not sure. I always looked at the S&P, but certainly I'll be looking at the Dow too. If we get a break on the S&P above this area, but we don't follow through with the Dow, then I might hang on to that scenario a little longer. The bottom line is the next move is down, whether it breaks these old lows or just comes down and bounces. The next major move is down. It'll last several weeks, or it could last just a few weeks like these. I mean, this was 6 weeks? 1, 2, 3, 4, 5, 6, 7, 8. So 8 or so weeks. So I'm looking for a move like that. There's that cough I told you would come up. All right, let's look at, we can look at the United Kingdom. We looked at that last time. We talked about the Great Britain's potential exit from the European Union, and we were looking at, how it bounced off this declining trend line and was moving up, and then this week it pulled back. So, it could go either way at this point. If it starts to pull off this way in the coming weeks, then I would say the European Union's probably going to exit. That's my guess. I think that's going to be at least short-term bullish for the the UK market. I don't know for sure. I think long-term, definitely it's going to be better for Great Britain than staying in the European Union. For whatever reason, they've they're kind of treated like a country outside of the Union, and at least based on that movie, and it's really harming them for trade and things like that. Let's see. We were also looking at Germany. Germany has supposedly the strongest economy, and Europe, of course, you can see it's in a downtrend, and um, you know, might go a little higher, but at the same time, this is the reason I use this triple line channel is because a lot of times this middle line will act as resistance. So if you're trading, you can kind of trade that bounce down or bounce off and up, like market comes down and then bounces off that. That's why I use that. It works pretty good sometimes. There's no science to drawing these channels. I just kind of picked, I tried to get the angle right, and then I try to capture a certain amount of the price action. You can see I let some of the price action get outside the channel here. So it's not perfect, but you're just trying to get your eyes to land on something in general, like a general pattern there. Let's switch over here and look at the dollar and gold and things like that. We've been talking about the dollar moving up a little higher. Hold on a second. Let me do this. It still didn't fit in there. There we go. And you can see the dollar had a pullback this week. You can see right here it pulled back. But I think this low right here is in for the dollar. And this is probably just the first move out. And then we got the first pullback coming, which means this next move is going to be pretty significant, probably up to there. And then, or maybe even a little higher. Sometimes you get, when you get this next move, it'll pull to just beyond this pivot here, then pull back, and then make a new high. Now, so it might not make it at the first run here, but then we'll have a pretty good pullback, okay, probably pretty deep back into here, and then you'll see this start to move out higher up into this area, and maybe beyond. So the dollar is definitely going to have another run. It probably won't be as strong as this run here, but it should take us to this between 105 and 110, maybe even 115. So if you look at the left-hand side of the chart, and you can start to see, you look for congestion areas. There's a pretty good sized congestion area right here. We could put an oval there or something. There's a pretty good congestion area right there. And usually these congestion areas are a good place for the trend to kind of grind to a halt. So I would focus in on this area right here, and then if it breaks through this, then we can talk about what we can reevaluate the pattern and look and see what might be possible on the upside beyond that. Let's look at the euro. The euro has been giving some opportunities here recently. This week it had a reversal, so you've got a pretty strong move down here from here to here. Okay, and then this week it reversed, and I would say this reversal is probably temporary. Might not even make it back up to the line, and we're probably going to start heading down this way to the lower line, and at least that's what I'm looking at. If you zoom in a little closer on the euro, you can see kind of what the weekly price action has been. This is almost a shooting star kind of pattern here. Usually the way you trade a shooting star is get below the low of the low price on the shooting star and enter. So this would have been a good trade here. I mean, this is probably, I don't know, 100,000 units or whatever. This is how many ever pips. This is probably $3,000 or $4,000 right here. So, but the reason, I don't know if you noticed or not, but see this double line here? This was a zone that I picked that I was expecting this move to end. So when you trade, you have to, nothing just goes straight down, nothing goes straight up. You have to find places on the chart where the trend is likely to come to an end, or as you can see in this case, it just whips back and takes all the money you just made. So in this case, I had picked this area here because it was kind of a mid congestion area here where the market came down, bounced, and then fell through. So I had picked this area here. It's completely arbitrary, but the market tends to move to these pivot areas, and it's hard to see. If I were to zoom in on in fact, let's just do it. Let's look at a daily chart, and you'll be able to see the pivot a little closer. Let me zoom in a little bit more again. So you can see this pivot is off of this right here. So this is the pivot I was looking at right here. So I'm expecting a box, or maybe I was looking at this pivot. I'm not even sure which one I was looking at, to be honest, at this point. I might have been looking at this one. And I was just looking at that wick and how the price reversed right there. It came up, pulled back, and reversed. So I was kind of expecting it to retest that area, and it did. Now, it could have easily gone through that, or it could have bounced above that. It's just an area that was of interest to me at the time. It just caught my eye, so that's why I drew that there. But it's helpful to step back and look at these areas. Here's another big area right here. I mean, and I think that's where this will probably quit going down. So if we zoom out a little bit here, let's see. Let me zoom out. I don't know if I can get enough room over here, but if you were to draw a box off of this pivot here, in fact, let me just do that real quick. If I draw a box off of this pivot here, where would that box be? It would be right about here, right? Would it not? And where is that? That's where we're expecting this to probably stop. So you got to look at these little areas and see where your eyes kind of land, and don't get greedy. I mean, the problem with the difficulty in trading is, I think people look at the world around them, whether it be political leaders or whatever, and they think, oh, this is going to be horrible. And the markets just aren't really that focused on that. They're really more focused on what's a good deal and what's a bad deal. So they're looking at value constantly. And the technical traders trade to these pivots all the time. So you just have to kind of, get comfortable with that. Let's look at crude oil real quick. Excuse me. So crude oil, I don't know if you remember, but I had talked about, we had this yellow box, and then I drew this red line also because I wasn't sure it was going to make it to the yellow box. It still could make it to the yellow box, but again, there's a lot of congestion right here, over here on the left-hand side of the chart, where sellers came in. The market rallied up, sellers pushed it down. Market rallied up, sellers pushed it down. Market rallied up, sellers pushed it down. So this line here is a natural area for selling to come in and for people to take profit. So that's why I was thinking maybe it gets up here, but maybe not. So if you're trading crude oil, you don't want to, maybe this is where you think it's going to go ultimately. Like, you wouldn't even be considering any shorts, let's say, until it gets up here. Let me lock that back down again. So let's say if you're wanting to short oil, maybe what you tell yourself is, well, I'm going to wait for it to get into this higher level resistance first, and then bounce down, and then I'll short oil. But when you're long, so you're down here and you're looking for a place to trade to, yeah, you think it's going to get up here, but you got to recognize that you do have, kind of a triple top head and shoulders thing here, and maybe it only gets to this red line. So why get greedy? If you can trade from say $36 all the way up here to whatever this is, 40, 47, 48. Man, be happy. Take that. That's good money. It's 40, almost 47.80. That's pretty good money. So that's the way you have to think about trading. You have to think in terms of probability. You can't think in terms of, I think it's going to do this or whatever. You have to think in terms of, well, where did people take profits last time? Well, they took them right here. So maybe they'll take them there again. Maybe they don't, but probabilistically, it's a good bet that they do. So this is kind of how markets work and how market participants think. All right, let's look at gold. After, a pullback let me get back on a weekly. So I'll start talking about days like they're weeks and weeks like they're days. So after we had a pretty good rally, nice little kind of a 5-wave move. And then we had a pullback that lasted, 5 weeks or so, 6 weeks. And it looks like the market wants to, turn around and go higher again. Now, what do we know about the first move off the bottom? Let's look at some of these bottom moves. Look at this bottom move. Rallied, and what did it do? It came right back. Look at this bottom move. Rallied. Now, it didn't come quite back, but look at this bottom move. Rallied, came back. Rallied a little bit more, came back. Rallied. There's a lot of times you get several attempts. Here's another one. Rallied, pull back. Rallied, pull back. So what's likely to happen here? Well, it's likely to rally a little bit. Maybe even comes lower still, and then rallies, and then comes back, and then rallies again. Okay, so don't get too excited about trying to catch this, okay? Because it's hard to catch that or catch that. Wait for the rally and a little bit of a pullback, and then enter at a higher low and get yourself some gold or silver. Silver's following a very similar pattern, but they are slightly different right now, which is unusual. It's been that way for a while. It doesn't look as different right now because you see the pullback and you see the rally, but there was some time there, a week or so, where gold was kind of triangling, or it was in this kind of congestion area where silver wasn't doing that. So they don't always follow each other exactly, but if there's one that you like to focus on it, and buy the other, or vice versa. Doesn't really matter. Let's see, what have we not spoken about today? We talked about the dollar, we talked about silver, the US dollar, JPY. This is another interesting market. A lot of news coming out of this market. The Japanese have been in a major downtrend for a long time. And of course, this is the currency, but I'm talking about like the Nikkei. The Nikkei topped way back in 1989. So they've had deflation forever, and they've been trying to do all kinds of crazy things to get out of it. Back here at this top, they announced negative interest rates. Of course, the market is not like that. And on this program, we've been talking about the US dollar JPY coming all the way back here to this 101 area. And of course, we're not there yet. So I would look for, the JPY to come back into this area before you get a bounce. But continue to watch this market because it's very interesting. I think what, if you're wondering what the U.S. leaders are going to do, I think, they have a tendency to kind of follow Japan, which is not good, given how bad Japan's economic health is right now. So the last thing I wanted to mention today was I wanted to point out, because it hasn't been in the news much, and I wanted to make sure you guys knew about it, is what's going on in Venezuela. Get on YouTube and watch some of these stories about Venezuela. Their government has just been a disaster ever since Chavez came in 1999, and these poor people are really struggling now. And there's a lot of news in Venezuela that's kind of coming through the non-traditional channels, and I really challenge you to go out there and look at that. And one of the reasons I want to challenge you to go look at that is because you hear similar things out of like Bernie Sanders, even out of Donald Trump, out of our leaders saying we need to punish this group and support that group, and America is not about groups. It's about individuals, and individuals reaching their own individual capacity. Not capacity, but their own heights, their own desires, and essentially the problems there in Venezuela are the government has made two major mistakes. Excuse me. Aside from pandering to the poorer groups at the expense of the wealthier groups, the two major mistakes they've made there is they've set price controls and they've printed money. And the price controls are bad because what happens is producers, anybody that produces anything, basically they get to the point where they can't produce their products and make a profit at the price control level, and so they just shut down the factory. So you got this massive shutdown of factories going on in Venezuela all over the country. And then on the other hand, the government prints money because they need to pay the military, and they need to pay this, that, and the other. And so they've devalued the currency to the point where it's called the bolivar, to the point where nobody will trade with them. So what happens if nobody in your country is producing and nobody will take your money? I mean, can you buy food? Can you buy? You just can't buy anything. You can't produce anything. You can't buy anything. So they've literally got their citizens over there hunting dogs and cats and eating pigeons and standing in lines in grocery stores that don't have anything on the shelf. It's a highly unusual. I mean, it's what happens when you have socialism, but it's unusual to see this kind of example going on in today's world, because most of these ideas have been proven, not worthy, don't work, 50, 75 years ago. So it's kind of an interesting thing to follow, and challenge you to follow that a little bit. One more thing before I go, I wanted to show you. So the market's been going up since 1999. We've had some falls and here and there, but the market's been going up. Now, do people feel better since 2000? I mean, do they feel like they can buy as much? Do they feel like they have the standard of living? Probably not. And so I want to show you a chart. This is a ratio chart of the Dow and divided by gold. And the reason this chart is significant, I want to show you a 20-year chart. I'm going to go back to 2000. And I want to show you something interesting here. That in 2000, so when the market topped, the NASDAQ bubble popped, this chart peaked right there. Okay? And really, it's been going down ever since. So think of this as your standard of living. This is really the key to what's happening in the U.S. The market, yes, you can feel wealthier, but the market is more than just what you can buy with dollars in the U.S. We trade with other countries and so on and so forth. And so your standard of living is a function of what we produce here and the jobs and everything. And it's also what we can trade with other countries and what we can bring in, what we can purchase from other countries and things like that. And what this chart is showing you is that our standard of living has been declining since the year 2000. Now, in terms of real money in this case being gold. Now, so what I want to show you here is that the trend, if we were talking about,
noticing the dominant trend and then looking for corrective moves in the dominant trend. I probably should have already drawn this, so I'm not having to bore you with the details of actually drawing. But you can see here the dominant trend in this case is this way. And then notice this looks maybe corrective, right? It's kind of up steep. I'm gonna have to elaborate a little bit because it's not as noticeable. And so what do we see here? We see potentially another leg down starting. So this is the Dow divided by gold, but Dow's on top. So if it's going down, that means the Dow is going down relative to gold. If the Dow goes down and gold goes up, then this goes down even faster, right? So I just thought this was interesting because this is kind of our standard of living in a nutshell, and you can see that it basically is topped out in 2000. And if you really did an honest evaluation, don't you feel like, based on how much money you spend at the grocery store and how much insurance costs and how much this cost and that cost, don't you really feel like that you're not able to buy as much with the same amount of money as you used to? College is very, very expensive now. I mean, it's gone up since 2000. It's probably gone up. Going to Texas A&M is probably $20,000 more expensive now than it was. I'm talking about total, than it was in 2000. So, I just thought I'd show you this chart. Now, this chart you can't always do on any kind of chart. You can't do ratio charts and subtraction charts on just any charting program, but just you could probably go online and search for Dow Gold chart, Dow Gold ratio chart, and you can probably see this chart. But I would keep an eye on this chart because it tells you what's really happening in our economy as opposed to just looking at the S&P 500 or just looking at unemployment or whatever. All right, everybody, that is it for this week. I really appreciate you coming in. Share the link with friends and family. You can follow me on Twitter @InvestorClass, and we'll see you next week. Take care. Bye-bye.